Hi, my name is Fulton Abraham Sanchez. I am the CPA of the firm Fast CPA Consultants, and today we're going to speak about how to apply for an installment agreement. The case for an installment agreement comes from the fact that there are some money owed to the IRS. Now, you have to remember that if there is some unpaid tax bill, there are some consequences. One of them is interest, monthly interest 5%, calculated over the balance of the unpaid tax bill. If you don't file on time, the IRS also, your tax return on time, the IRS also charges you an additional 0.05% penalty in a monthly base. Now, the maximum amount that the interest and the penalty can accrue is up to 25% of the debt. So once the interest on the unpaid tax bill reaches 25% of the amount that you owe, there is no more interest to be charged. But still, imagine it's a quarter of what you owe from the original debt, from the original amount that you didn't pay the taxes, will be assessed as interest. Now, in terms of tax principles, there are some different plans that you can apply depending on the amount that you owe. The first one is the guaranteed installment agreement. This is if you owe an amount of $10,000, and the amount to pay, it goes up to 36 months. Now, this is easy to do. You can create your online profile and pay the required fee. It goes from $150 to set up the payment installment agreement, and set up the payments either by check or direct deposit. When you owe $10,000, up to $10,000, it's not required to do direct deposit, but you have to pay the amount at the date that you mentioned, you said that you will pay. The other option is to do by paper. This will require a form to be sent to the IRS, and then manual checks sent every month till you pay the full balance. The next one is Streamline. Streamline offers in terms of the amount that you owe. Streamline is up to $50,000, and it takes up to 72 months to pay. Now, here, we will explain that in a little bit. If you owe over or up to $50,000, you are required to pay online, meaning to pay direct deposit. That is the minimum requirement when you owe up to $50,000. In addition to that, you will be required to submit your financial statement. That's a form the IRS, a specific form the IRS created for demonstrate your financial situation, and that will give the minimum amount of information to the IRS. The next one will be the partial agreement, but this partial agreement is a little different. This is only if you have an amount that you did and you want to pay in a portion of the debt. Now, that will give you like 5 years, but then remember, you are not paying the whole amount. You are saying that you want to pay just a little. And in case of businesses, this if you owe $25,000 typically in payroll, up to $25,000, the IRS will give you up to 2 years to pay. Problem is that you need to submit also financial statement. In terms of reports, now, you need to have all your tax return filed completely. If not, the installment agreement will not be possible to do. Second, the financial statement means that you need to submit to the IRS your positions, income and expenses on a specific form. Now, if you owe $50,000, you have to do the financial statement. And as a business, if you owe $25,000, you will also need to file that and give a direct debit for that. Now, the installment agreement is the ending report. Remember, you can do it online or by paper. If you have any specific question about this topic, you can send us an email or click on the link here in the description box. You can also subscribe to receive more videos when we post it, or you can check the channel that we have here, Fast CPA Consultants. Thank you.